politics aside, I don't care what side you're on. There's craziness everywhere. But the more that you understand how to protect yourself for where you are, where you live, where your properties are located, the easier it is to sleep at night. Hey!
We're talking about some real stuff. This is really beyond important. If you couldn't tell based around all my last day or two of social media stuff, I think I'm going to leave politics out of this as much as I can, but some of this is absolutely political in the sense of Biden came out, which, by the way, preface, I don't actually believe it will pass. That's how crazy it is. But Biden came out with this bill that they're trying to put forth to really tax the wealthy with basically unearned income taxes. And that affects, your potential selling of your own personal home. Personal, right? Now, this isn't, rentals, which I still have a massive problem with. But now you're talking about all the equity you have in your home, the potential sale of your home, which you're not even listing it. They're saying they could potentially tax you on that. So I lost my mind, of course. And I said, this is absolute nonsense. And I immediately called Tommy, like literally immediately, dude, here are my rentals. Here's my house. I have 500 equity. I have this and that. And I'm like, how do I structure this nonsense? So in the craziest scenario that somehow this passes, I don't get taken out to the cleaner. Now, Tommy calmed me down. Said, hey, all good. We got it. He agrees. He doesn't think it's going to pass. But there's a practice that the real wealthy do, right? And I mean, the real wealthy, like not me, not Tommy, not people that have started accumulating wealth. I mean, like hundreds of millions, if not billions of dollars. There is an actual strategy that they do and they put forth. And so me and Tommy were just talking about what I'm going to do. And I'm like, we need to just start sharing this because the title of this is, protect your assets. But that's the reality is, we all work really hard, Tommy included. I don't care if you've never done a deal in real estate. I quite literally don't care. As long as you're here, you're in the right place. Because the reality is the bill is so obscene. It like, again, I don't go political, but like for someone to say they could tax my potential unearned income if I sold right now, they would say you would make roughly 500,000. Like that's insanity. And the reason why people get so upset at the wealthy, right, is because they don't pay taxes. The irony behind that is the IRS literally built all of their laws with intention to give people tax breaks if they do what they want them to do. So like developers get massive tax breaks if they make their houses green, right? Because the government wants more green buildings. Well, why is it the developer's fault, or why would we blame them for having massive tax breaks? Because they're just following the IRS rules. So what the wealthy do is they have really smart people such as Tommy and his team educate them all the time of ways to set up things, set up entities, set up trusts, set up business operations, set up flow through entities, set up all this stuff so that they are protected and quite literally have anonymity and they have tax shelter. Many people think tax shelter is a negative word and is for offshore accounts and all this illegal activity, which I think, Tommy, you could probably speak to some part of that, which isn't actually illegal, but I digress. Tax sheltering is just saying, hey, I made a lot of money. I don't want to have to give it to the IRS, at least all of it. There's nothing wrong with paying taxes. I'm a United States citizen. I'm happy to pay taxes. But I don't need to pay unfair amount of taxes either, right? I'm the one out there earning, creating jobs, creating income, building. And so my opinion is pretty staunch and just like happy to pay taxes, just don't need to be overtaxed, right? Literally left California. From there, went to Arizona, better tax option. Literally left Arizona, went to Florida, great tax option. So you guys are in the right place. Again, I don't care how many rentals you have. I don't care if you're actively doing real estate. This is and most of you are, by the way, I'm looking at the names. Most of you are engaged. You're here, but Tommy's going to go for give or take, 30, 45, maybe an hour, just about some suggestions he's given me and to talk to you about what the real wealthy are doing. But even more important, talk to you about what the average Joe, me, Tommy, you guys, all of us, the average people, what we're doing to protect ourselves, how we are protecting ourselves, how we are, giving ourselves anonymity in the case of lawsuits, things of that nature as real estate investors, but also keeping more of our own money. So obviously, Tommy had to cool me off a little. He gave me some great education and immediately said, we got to turn around and we got to teach others this stuff. So Tommy, I'm going to let you chime in immediately. If you guys have not yet met Tommy, seen Tommy, Tommy and I have been vibing on these calls recently because I'm so passionate about helping you keep more money, setting up entity structuring, tax planning, all of the stuff that I just don't believe is really educated in the right way. And so Tommy from Prime Corporate Services, he and his team are my guys. He's who I go out to for everything, literally everything. That's why I called him first. They have everything from setting up your entity if you need that, to estate planning, trusts, LLC, just everything. So Tommy, I'm going to let you take the reins here so I don't take too much time, but I appreciate coming on, brother.
You're the man. Thank you. I, as if you guys don't know already, but Justin has your back. This is, I pulled the text up just so I could read it to you. This is what he sent me at 8:30 in the morning. Changing my daughter's diaper, getting a text from Justin. Dude, we need to do a training on asset protection ASAP. Big concern for investors. President's talking about unrealized profits. That's at 8:30. I'm wiping a butt. He's talking to protecting butts. And anyway, he wanted me to get on here to talk to you as soon as possible. So I'm happy to be here. It is a crazy time. These unrealized profits are scary to a certain extent, but what Justin just said as well, I don't think it's going to happen. I don't think it's going to pass. I sure hope not. However, there's crazier things that have been passed, and there's crazier things that get mentioned to put the feelers out. I almost feel like the first time things get mentioned, whether or not they get passed by Congress, oftentimes is to test the temperature of how people will react, right? How much can they get away with? Politics aside, I don't care what side you're on. There's craziness everywhere. But the more that you understand how to protect yourself for where you are, where you live, where your properties are located, the easier it is to sleep at night, whether you have one rental property or 100 rental properties. And the whole more money, more problems is real. The more successful you get, the larger the target on your back becomes. Those are all very, very real things, right? So keep that in mind, regardless of where you are. Sounds like we've got a lot of people here that, if there's anyone else, I've got quite a few pulled up as well. So I'm going to go over the states and then I'm going to share my screen. Virginia. In Virginia, you can make a living trust to avoid probate for virtually any asset. Okay. South Carolina, living trust for virtually any asset. Florida, living trust for virtually any asset. Texas, same thing. California, same thing. Those of you in California, John, Steven, you're in for a treat. My examples are based off California because I live in a world of worst case scenario, what not to do. I obviously step in and want to help you understand what you can do. But California is it's always my kind of go-to. I was originally from California as well. Justin, I don't even know if I've ever told you that. I was originally from Palm Springs. A lot of my family's still there. I'm currently in Utah. New York, living trust. Oregon, I don't know Oregon off the top of my head. Let me look it up real quick though. I have got you. Oregon is also going to be a living trust. So you can see a trend, right? Living trusts, a lot of times people say, well, I have a will. I'm good, right? A will is great, but a will is still going to have some complications depending on the state that you reside in. based off of probate. So I want to go through these slides. The general rule of thumb, assets over $150,000. That's California. Once again, if your assets are worth more than $150,000, this is a concern to you. Long story short, if you own a house, this is probably something that you're going to want to deal with at some point. If you have a will and you do not have a trust, you still could end up going through probate. Keep that in mind. That was one of the first things Justin asked me yesterday, was like, can we just do the will? Can we do we have to do the trust? Do we do it all to just make sure we're taken care of? Part of what we do, we will not do just a trust or just a will. When we do estate plans, it's trust, will, living will, power of attorney. They all want to talk to each other because they all have a purpose. They're there for a reason, right? Why is an LLC different than an S-Corp? They're very, very similar, but there's tax benefit with an S-Corp that LLCs don't necessarily offer, right? So even the most minor changes really could end up making a massive difference. So I want to talk a little bit about that. I've shared this slide before. I put it in front of people as often as I possibly can, just to really drive home the importance of the structure long-term. Okay, some of you may have a LLC, multiple LLCs, multiple S corporations. Are you familiar with what your risk is within those particular entities? Okay, that's just a personal question for you on what you already have and the assets you already have. But starting from the top, trust, will, living will, power of attorney. Justin and I have a mutual friend that $10 million a year, right? $0 in taxes. Amazon, $0 in taxes. Some of the wealthiest corporations, $0 in taxes. So when Biden comes out and he talks about these unrealized gains, if you purchased a home 5 years ago, you have equity in it right now, right? So the thought process is it gets presented to the public as if it's for the wealthy, as if it's for $100 million families and over. Why is that the case? Most of us under 100 million, if not all of us, right, are going to say, doesn't affect me, no big deal. That starts to decrease that amount, right? Next thing you know, 100 million is 50 million, 50 million is a million. And that's how they start to get to the point where those unrealized gains, that is why wealthy people invest into real estate, is there's so many deductions, right? That's why business owners have employees. That's why they get those rewards, kind of like Justin talked about. So it is all there to impact behavior on some way, shape, or form. So at some point, having that living trust and having it have some ownership into the holding company is not only going to give you the privacy. If you were at the event earlier or last time I was here talking to you, I talked to you more about the privacy aspect. But Justin wanted me to dive deeper into, let's combo it with the taxes. Let's talk more about how to make sure you're protected, but where are the tax benefits, right? Why shouldn't I be running everything through a trust? So if your living trust has ownership in your holding company, all of this depends on how your money flows. The more that you're organized and the more that you know the wholesale deals that you do, the fix and flips that you do, they're coming from this active income over here. But that's where we want to make sure the profit and the loss stays. The tax rate is 10 to 37% currently. They're also talking about bumping that up to 42% for higher earners. That's where I want to take my deductions, right? The money that I pay myself from Prime, the money that is active, the day trading, the fix and flips, the real estate, that's where I want to take my deductions, because that's what's going to lower my higher tax rates on the active income. Now, for those of you that have the passive income and you have the long-term buy and holds, your tax rate is lower at that 0 to 20%. But why did Justin panic when he called me yesterday? The mention of unrealized gains being taxed at that 0 to 20% is extremely scary, right? One of the properties that I own is up $500,000 in equity in the last 3 years. It's insane. I don't have that money. That $500,000 is not in my bank account. it's sitting in equity based off of the inflation. If I got taxed on that, I'd be pissed, right? Point blank. There's no other way to say it. It's not the money that you're making currently. It's the money that you're going to be making and the assets that you have that you need to protect now to make sure that down the road that doesn't make a difference. Okay. So the deductions want to go with the active. The passive income wants to be separate. But once you're in a position where you don't have to live on the money that the passive income is generating, then it can start to go through that living trust. We don't want the active income to go through the living trust because it's taxed at the highest rate and the deductions are minimal. And this is what I was talking to Justin about yesterday. He's like, we got to tell everybody this. We have to make sure everyone is clear that active income is not going through the living trust if that's what we're living off of, or that's what we're paying our bills off of. But at what point do you not need that passive income? It's a great problem to have, but it's worth thinking about now if you're not there yet, so that you're structured accordingly. And if something crazy like taxing unrealized gains happens, you're already structured. You can make a quick pivot, and that can then go through the trust, right? To bring that full circle, that property that I have that $500,000 of equity in, if I'm renting that out and I'm going to get taxed on it, I'm not spending $1 of it regardless. I'll just run that through the living trust. If something happens to me, it goes to my wife, it goes to my daughter, right? So one, I have the control of where it goes if something happens to me. Two, I'm making sure to protect it with the trust, with the holding company, and with the LLC. But three, I'm not going to allow those unrealized gains of the money. I want to decide if I want to take my family on vacation, if I want to pull it out to invest in more properties. I don't want to pay taxes on unrealized gains. And that's where the scare aspect comes into play of we're going to start taxing those unrealized gains. This isn't just in real estate, right? Cryptocurrency is a big one. A lot of you probably have cryptocurrency. If you don't, that's where a lot of this is also coming. The cryptocurrency unrealized gains are massive for a lot of people, right? Real estate's really in that same bucket. So is it scary? Yes. Do I personally think it's going to happen? I sure hope not. Is that maybe that's the optimist in me saying no and telling Justin no? But what do you think, Justin? What else do you want to
dude,
add?
listen.
We went over a lot yesterday as well.
You've said it, and I say it, crazier things have happened. And that's kind of the I forget what law it is, but like if it could happen, it will happen type of thing. And I just am sitting here with the vast majority of my audience is heavy into real estate, and to some level crypto, because I really love crypto. And I'm glad you brought that up, because it is crypto, it is stocks, it's assets. It's not real estate. He didn't say, hey, I'm going to go tax unrealized income on real estate. He said assets, right? And that is your stock portfolio. That is your crypto portfolio. That is your home. That is your rentals. That is assets, right? And so I don't believe it will pass. I believe it is a way for him to create more news.
Sure.
And I think it's newsworthy and it keeps him top of mind and all the other stuff. But the reason why I was like, we have to teach people is I have a real estate audience, and it's just good. It's so important. The more wealth and the bigger I become, economically and all these things, I need to think different. I said this at my event. Is a buddy of mine told me one time, you think like a rich person, you don't think like a wealthy person. And it was literally, I say it and I still get shivers because it was like a punch to the gut. Like, oh my God, like that's right. Right. And subsequently, I've made a lot of moves even since then. And I continue. That's why I called Tommy to think differently, utilize my money differently, protect my money. Literally had a call with my accountant about making sure my car is 100% tax write-off, where I never used to really worry about that. I would take whatever depreciation he gave me and call it a day. Now I'm like, absolutely not. We're making sure this is 100% tax write-off, and here's why. My point to all that is, again, I don't care if you don't have 400 rentals. You need to think the way I'm advising you to think, because I'm 15 years into this business. And if I could have known this prior, my life would likely be different in a pretty vast way, right? And maybe not tangibly, right? Because quite literally, you know, a lot of the things I do are buy and hold anyways. But guys, start thinking in a way of like protection, not protecting and hoarding money. I'm just saying you earned it. Don't give it away, right? Just think a little smarter. So that's kind of my thoughts about this, but that's why this is so important.
The old saying is dress for the job you want, not the job you have. And I joke that nowadays, with how many people are self-employed and just the clients that I have, it's structure yourself for the business that you want, not the business you have. And I mean that very seriously, just because if you're doing one wholesale deal a month, you obviously have an LLC. If you have one rental property, I sure hope you have that separate, just based off this slide, and you see the difference in the tax rates. But that's not where you want to be. That's where you are. Structure yourself so that as you build and as you grow, you plug and play, and it's a lot easier to set it up properly from the beginning than it is over time as you grow and as you scale, right? So I wanted to add that in there as well. And then we got a question in here as well that it fits very perfect right here from a business funding standpoint. James is wondering, would you recommend buying a shelf LLC for the holding company to increase time to business funding? So let me kind of explain that based off of this picture here. The holding company really works a lot like a shelf company, right? The holding company that I have is more for privacy and amenity protection than it is doing any business. That's why I have Delaware, Nevada, Wyoming there. You guys are probably familiar at this point that those are privacy states. Those are corporate haven states. So from this example, it all depends on where your money is flowing. I like the concept of building business credit off of that holding company, because if you build one line of business credit and I want to do a wholesale deal, I can lend from my holding company to my active LLC. Then my active LLC can pay my holding company back. I have an easy profit and loss statement. But then let's say I'm going to buy and hold another property that's over on my passive LLC, right? And I want to come in and I want to remodel a kitchen. I'm going to lend from my holding company $20,000 to my passive income LLC, remodel the kitchen. Then I'm going to pay myself back to the holding company. What have I done? I've created a record that says I'm lending money to my business and paying it back from a tax standpoint. But guess what else I'm doing? I'm building a larger line of credit for my holding company. From a business standpoint, I'd rather have as much available credit as possible than a couple smaller credit lines, because some years it's going to be more active income. Other years, you may be stockpiling, getting more passive income coming through, right? Who's to say what you're doing in 5 years? Structure yourself for where you want to be, not where you are currently. Cool? Hopefully that answers your question in good enough detail there, James. Story time. I love Prince, so I tell this story as much as I can. Prince died without a will. Prince has more money than all of us. If those of you that are thinking, I don't have as much money as Prince, why in the world would you talk about Prince? It relates directly. Prince is the man, and there was no will. It took 6 years to settle Prince's estate. When Prince died, his estimated value, I didn't include this on here, but I can just tell you, his estimated value when he died in 2016 was right around 85 million, 85, 86, somewhere around 85 million. By the time it settled 6 years later, they said, well, inflation's happened. Prince is dead. So everything that he signed, everything that he's touched is now worth more money. 6 years of heartache with siblings, fighting, money going to people that he hated, money going to family members that he never wanted to talk to again in his life. But 6 years later, that equity, that property is now worth $156 million. Some of you may be thinking to yourselves, good for his family. You wait 6 years and come up on, another $70 million. That sounds awesome. Not quite, because there's no will, because there's no living trust, all of that is taxed. Some people say, this isn't totally proven, but the way that I think about it, did they increase that value because the number was so large? And now the IRS makes more money off of that $156 million instead of the 80. That's conspiracy theory of me. Don't take that to the bank. There's blogs about it you can read, I promise. Take your own, think for yourself in these different areas. Just don't let it happen to you, right? So that estate, once that all happens, there's a music company involved, there's estates involved, there's equities involved. I tell this story because everyone knows Prince. Prince is the man. There's a lot of money, but you can see how quickly that compounds. Let's say that music company that he owned was your retirement account, was your life insurance policy, was your vehicle, right? It's the same concept. It's just different dollar amounts. So at the end of the day, there's plenty of examples that could be total horror stories. I'm not here to scare you. I'm here to help you understand these things are a reality, right? No one plans on dying, but the two things that are certain, Benjamin Franklin said it best, death and taxes. They're going to come at some point. Taxes are going to come first. Let's protect ourselves from a tax standpoint, but let's also protect the assets that we have there as well, right? Justin, anything you want to add on my man Prince here?
Just a very handsome young man with some good curls. No, I wanted to make sure everyone understood this isn't just for the wealthy, but even the wealthy aren't prepared at times, right? And someone like Prince wasn't. Again, we don't have to talk about death, but no one's ready for it, right? No one knows when it's going to happen. Like, just get your shit in order. That's really kind of the point, right? Is to realize, like, yeah, the reason this is happening is because what Biden is saying, but the reality is it's my duty to make sure you guys do get your shit in order, because you have wives or husbands and children and people who should be beneficiaries and get that without having to pay obscene amount of taxes based around whatever's going on with the IRS at the time, right? And so, this is really like, get your house in order type of time, right? There's a lot of chaos in this world right now. And this is business-wise, thinking as a owner, thinking as someone who wants to keep their money and not just give it away. This type of stuff is going to be really, really useful to yourself.
Out of curiosity, throw in the chat if anyone has a friend or a family member that went through a death of a loved one and ended up fighting with that loved one, right? For example, when my grandpa passed away about 15, 16 years ago, my mom and my uncle were best friends their whole life. They're identical. They're the same person. One's a man, one's a woman. When my grandpa passed away, my uncle and my mom did not talk for 10 years. They've since been able to rekindle the relationship, but for 10 years, they did not talk because of money, right? And it's such a terrible thing to talk about, because it wasn't even necessarily about the money to them. It was the principle of, how come dad gave you this as opposed to splitting it evenly, right? But if all those things were in order, and the trust and the will and all those things are in place, they could have grieved. They could have gone about their lives. They could have stayed friends throughout that whole period. So to me, I know that's on a little bit of a deeper level, but you're not just doing this for money. Everyone has a why that involves a family, a friend, a loved one. It's oftentimes, apparently no one knows anyone over here. But
I was going to mention, I didn't have the family duel, but like, what I will tell you is, when my mom passed, I was the inheritance, but it still had to go through probate, and there was a ton of taxes taken out. Yeah. She owned the home free and clear. And, the reality is, because it had to go through probate, because she didn't have a will, there was massive amounts of taxes taken out before it actually reached my hands. And so it just kind of sucks, right? I didn't know what I didn't know. And so I just accepted it. But this is something that if you haven't taught your parents the stuff we're teaching you tonight, it's a conversation you have to have, right? And to Tommy's point, like if you have siblings, remove that. Money will cause the worst scenarios, right? Make your parents go start a trust, make it a living trust, make it very clear who the trustee versus the beneficiary is, right? Like this is important shit.
For sure. Yep, 100%. And I wanted to give, I've got 2 more slides here that before I I want to make sure I leave some time for questions as well, but I talk a lot about probate. What is probate? Probate is the court supervised process of validating the will, the trust, or the beneficiary. So Justin hasn't even seen these slides, but what he said transitioned this beautifully into a lot of times what doesn't go into probate are things like life insurance or retirement accounts. And the reason for that is when you set up so when I set up my life insurance, I set it up before I was married. So my sister was my beneficiary, right? But that's one of the questions that they ask when you set up a life insurance policy. So a lot of times the beneficiary's there, the life insurance policy goes to who the beneficiary is. But once I get married and once I have a kid, it's like, it's not just a one and done type thing. Every 3 to 5 years, depending on your wealth and as things change, if you have a trust, if you have a will, when was the last time you updated it? Right? The value of your property has changed quite a bit if you already have these things and set them up 5 years ago. Right? For me, I love my sister to death, and she actually works here with us. She was a formal financial planner, so I set it up with her. She may even watch this, and it's nothing against her. I want my kid to have that, right? So how can you avoid probate? Plan for it. Have the changes in place. Understand that whether it's a review every year or every 3 to 5 years, make sure that you have those things in order. It's not something you have to do every year if you're not building crazy amounts of wealth in different businesses, but as long as you have it in place, this is how you avoid a lot of those things.
So one thing you mentioned, Tommy, I want everyone to hear this loud and clear. It is most important to control real estate, not own it.
For sure.
This gives you that. A living trust gives you the ability to actually control the real estate without having the liability of owning the real estate. So I myself tend to think homes, personal homes, are not an asset. That's my own belief, right? I kind of have this Grant Cardone belief about it. And it immediately became to reality when I bought my home in Miami and spent millions of dollars, and then immediately have to go in and spend another $20,000 to replace my roof. And I was like, here it is. This is why it's not a freaking asset. It doesn't pay me. I pay it. And so that being said, I would tell you to control the asset, your rental properties or otherwise, without having the liability, which meaning if you got dragged into a lawsuit and then somehow they were to wrap into your LLC, then they could potentially come after your rental properties. They could potentially come after your house, your equity, those type of things. But in a trust, the anonymity piece protects that, right? But you get all the benefits of the control of the real estate, right? This is why creative financing is so great. You control the real estate, you don't actually own it, so you don't have to take on the liabilities of said real estate. Make sense? That's why banks love it. They're essentially in control. They just don't have to deal with being the landlord, right? So understand, trust give you the control without the ownership.
Yeah. Because even if a lot of people will say, I have a will. If that still goes to probate, I'm going to save that actually. If that still goes to probate, that still could end up costing a significant amount of money. And I want to go over this example. I started with Prince, and Prince is $156 million example may not resonate or hit home with everybody. So I'm going to talk about a house in California that's worth $1 million. Disclaimer, that picture is probably worth like $3 million in California, but
I was just going to say that.
let's still talk about it. Max, Max is wondering about a recommendation on a probate attorney. Where do you live, Max? And do you currently have someone going through probate? Or are you wondering about the estate planning portion, the estate? Are you trying to get it ahead of time, or do you already have someone going through it? Tell us in the chat if you would. Because we have estate plan attorneys. That's part of what we do, is full estate plans, trust, wills, living wills, power of attorneys. I highly recommend that you use ours if you're in California. My uncle is an estate plan attorney and only does them for a minimum of $30,000. Trust, wills, living wills, power of attorneys. He's always like, send me some business. I know this is what you do. I'm like, no way. I've worked out deals for bulk discounts for a couple $1,000, $2,000, $3,000, depending on all the situations, and unlimited amendments. These are things that can also be expensive, which is why I think people push them off. But for $1,000, $2,000 to make sure
it's a no-brainer. Like,
it's a no-brainer. It really
don't be short-sighted. All of you, don't be short-sighted. This is real stuff. I mean, I literally probably lost $300,000 to taxes when my mom died and the house had to go through probate. $300,000. If I would have been a little older and I was 22, 23 at the time, I may have actually told my mom to do something like this because she wasn't healthy, right? But I didn't know, and now I know. So do this for your parents, right? Do this for you so your kids don't have to have that kind of situation. But anyways, keep going, Tommy.
For sure. No, thank you. And Max, I'm sorry for your loss. Max saying Phoenix, my mom passed. I'm sorry for your loss. And these are real things. Like, these are things that if you're not in the planning stage currently, you are. These are things, everyone's in the planning stage because everyone's looking to build wealth. I'm sure I have someone in Phoenix within my network. I don't know off the top of my head. If you're a client of ours or working with us, reach out.
Is he asking for a probate attorney in Phoenix?
Yes.
I actually have one because we do a lot of probate deals in Phoenix.
Cool.
So Max, awesome. I can refer you a probate attorney.
If not, I'm sure we have one in our network as well that can happen. But if you got it, that's perfect. So let's go. This example here, the reason I use this, as I told you earlier, I use California as the example because it's worst case scenario. A lot of them are very similar from a conceptual standpoint with probate, but the dollar amounts get very high very quickly in California. So I try and use them as the example because if you're in California, have a trust, please, especially if you own real estate, anywhere for that matter, but $1 million home in California, no trust. They go off of the value of the home. A lot of states, it's not the equity. If I owe $500,000 and my house is worth $1 million, that $1 million is in probate, right? They can take all of it, but $60,000 in Utah and give that to my wife. I'd be rolling over in my grave if I had $500,000 in equity and 60 went to my wife, right? So with a living trust, without a living trust, $25,000 instantly goes to probate on $1 million. Another $25,000 is probably going to that probate attorney, right? We should almost have a follow-up Zoom with what you have to go through, Max, out of Phoenix. Just because it's real stuff, and until it happens to you and until you see it, it's the shoulda, coulda, woulda thing. But set yourself up so you are protected and understand what the tax benefits are going to be currently, in the future, as you start to move forward. So another example, California, $500,000. Obviously it lowers that cost. But remember, if I owe $300,000 on this house and it's worth $500,000, just like that, they're going off the $500,000, of course. The average probate could take 2 years. Think about how much your property that you've owned has gone up in equity in the last 2 years. Additional attorney fees, additional equity, additional tax. Those are all additional expenses that simply could have avoided by having a $2,000, $3,000 entire estate put in place, right? So coming back to this, what do you have currently? This is for your visual based off what we've covered. What do you currently have? What do you need? Is your money flowing properly? Do you have a rental LLC that's doing wholesale deals currently? Separate them. The tax rates are different. The liabilities are different, right? Do you have trading accounts that are tied together. I can't tell you how many real estate investors I've talked to that are like, oh, the fees were lower on Coinbase Pro, so I just used my wholesale LLC. That's cool, right? I'm like, if you want, it's not cool by any means. That's the last thing I would ever do, but I live in this stuff all day. So if this is where you are currently, don't feel bad about it. Let's just fix it. I know Justin already dropped that link in the chat there. Scan the code. You can schedule an appointment to talk to us. If you are already structured, let's review it. If you only have the active LLC, you need the passive LLC, let's do it. But for those of you, this is the first time you're seeing me or the first time you're hearing about Prime Corporate, entity structuring, we can help review what you already have, structure what you need. Business credit development, I've got an amazing team of credit advisors that help build and develop actual business credit to separate your personal and your business liability. Tax planning and tax filing, and full estate plans, everything we're talking about here today. Trust, wills, living wills, power of attorneys. Make sure to schedule on this link because there's massive discounts for this community. So make sure you either let us know that that old JC sent you over or that you're a part of the group here.
Yeah, and I think one thing, and I know people are going to have a lot of questions. For the sake of time on the East Coast, it's 7:45. For some of you guys who are just getting out of work, just book the call. And the reason why I'm really adamant about it is because then you can ask your questions and really figure out what you're trying to do. Here's the thing. I'm currently going to go through the estate part because that's why I called Tom. I said, hey, I need to set this whole thing up. Don't be short-sighted, right? Meaning, even if you don't have a rental and you just need to figure out your own personal house, the way the taxes flow when you sell a home or you, let's just say, God forsake it, someone passes and it goes to your wife or the child, the way the taxes flow to the beneficiary when you are in a trust is a whole lot different than my experience when I ended up going through probate. The home went into my name, we sold the home, and I got taxed at full rate. It's a totally different tax bracket. And you just need to know those type of things. So all these things are what you need to talk to Tommy and his team with. And by the way, just so we're all clear, you likely aren't going to get Tommy on the phone. Just so we're clear. He's doing this because he's my guy. But his team is every bit as educated, if not more so. This is really important for anonymity for those real estate investors. So Tommy's point, my wholesaling and active and rehabbing income is in one LLC. My passive rentals is in another and another, multiple LLCs because I have enough of them, right? But now I'm like, oh man, that's not even good enough. I need now to wrap these things in trust, multiple trusts potentially. That's what Tommy and I are going to figure out where I need to go. But guys, personal home, your own home, your trading accounts, crypto, this is not just for the guys that have 100, properties in their rental portfolio. Get on a call with these guys because this is serious, right? Like, again, even if this crazy Hail Mary that Biden's throwing about this, like taxing unearned income doesn't pass, maybe he gets somewhere. Maybe he creates a tax bill to land where he really wanted to, which is more aggressive than what's currently happening, right? So guys, keep more of the money you make and then protect your assets, right? I mean, that's the reality. So
I dropped that link for those of you that love just learning, maybe a little light reading before bed. There's an IRS death tax code for you.
Little light reading, no big deal.
Something easy before bed. Once again, it really, Jennifer, I appreciate so much. Been working with us for 6 months. The Peace of Mind holding company. That's what it's all about. It's the peace of mind. It's sleeping at night. It's making sure that you have somewhere to turn. It's Jennifer knows any questions, tax related, asset protection. We're a one-stop shop. We've created that intentionally, obviously, but Jennifer knows we're a call or an email away and we get things fixed. We make sure we're protected. It's about making money now, but it's protecting the long-term and the legacy that you're creating and who you're actually doing it for.
Yeah, I love your analogy of the old saying about, dress for the job you want, not the job you have. I love that. I mean, that's what we're talking about. And that's what I want everyone to understand. So appreciate you, dude. I know it's getting late in your world. You got to go home to the baby. I got to go put down my baby. I appreciate all of you showing up. You're committed to yourself. Remember, I believe in 3 things: commitment, intention, and action. Being here tonight shows that commitment. Now be intentional with the action and book a call with Tommy and his team. And we'll circle back later. Go to primecorporateservices.com/TSOF to do it. primecorporateservices.com/TSOF. Appreciate you, dude.
Thank you, man. I appreciate you. Thank you, everyone.
Later.
Good
See
night.
ya.